Hello and welcome to Saturday evening at 4 p.m. We are here again with our next episode of PSN Speak series. Now, as you all know, in this series, we generally talk about special needs planning. We take some important element discussion for special needs children families, how to plan for their future. Now, today, I am going to take up a very important topic, and it's for single parents. Now, single parents who have got a special need child to care, how should they plan for the future? What are the elements they should look at covering? How basically what issues they will have to address? So, we are going to talk about for single parents with a special need child to care, what is there in financial planning? How should they go about? Now this, because there is lot many things to discuss, so we have broken this episode into two episodes. I'm going to talk about certain aspect today, and I'm going to talk about rest other aspects in my next episode. Now, single parents means you do not have a support at your end to take care of your child after you. Within your lifetime also, there would be situations, there would be scenarios, there can be eventualities where you will have to think, where the planning is going to be difficult if you have not made a provision for it. And that's why financial planning is such an important element. Now, when I say financial planning, it does include element of estate planning or the legal planning, which answers the most important aspects of your life. That is what after us, or I would say what after me. So how should you go about planning for the child future? How should you go about planning for yourself also? Now that is important. So let me take you some of the tips today, and as I said, some of the tips I am going to talk about in the next episode. So budgeting is the first important element, and when it comes to financial planning, budgeting is the basics. Budgeting is the first step for any individual to start with the planning. Now, budgeting means knowing about what you are earning, where you are spending, and what you are eventually saving in your hand, which is available to you for your future. Now, when you have a special need child, budgeting is so important. So what you should do, you should create a separate budget for the special need child. Start managing the expenses of special need child separately. His food, his clothing, his schooling, transportation, any insurance premium you pay, and lot many other elements of your child life, there would be where you are spending money on a regular basis. So budgeting should be done separately for the special need child. If you have not done it, start it today. Look at our budgeting sheet, budgeting calculator we have provided. You can ask for it and start managing the budget separately. Now, how does it help? When you know how much you are spending for your child, it will be easier to identify what is the lifetime care cost you have to plan for your child. So start with the budgeting, the first element or the first basics of any personal finance. The second comes the emergency fund. Make a provision of emergency fund. Because you are a single parent, if you are short of funds, there is no one else to rely upon, and what you will have to manage is from within your own resources. So without an emergency fund, the going can be really difficult in those situations. So that's why make a provision of a good emergency fund. Now, what do you count as an emergency fund? Anything which can, which you think can come up in the future. Say there is a job loss, so you have to manage expenses for next few months. There's an emergency expenditure comes up. There's a health emergency which can come up, and There would be other situations where you would need funds, the income is not coming, and you need funds to survive upon. Now, because there is a special need child, the emergency fund requirement in your case becomes higher, because along with the living expenses, there would be special child expenses you have to manage. So, while creating an emergency fund, ensure that you have an adequate emergency fund. You can park it in your bank, fixed deposit, short-term funds, debt funds, whichever, wherever you feel comfortable, you can park that, but create an emergency fund. Always go along in your life with an emergency fund. Now, in general situation, we advise a 4 to 6 months emergency fund is good enough. But when you have a special need child, you are a single parent, you might keep an emergency fund say for around 9 to 12 months. So, emergency fund, ensure that you do create a good emergency fund. Third, adequate insurance coverage. Life, health, disability are three pillars of special needs planning. Why I say three pillars? Because these are the three basic provisions which ensure that if your family suffers a financial loss due to any eventualities, any emergencies, these insurances can cover up. Now, if these insurances can cover up, you won't have to spend money from your pocket. Your savings is intact. So, you as a single parent, you need to ensure that your life, health and disability provisions are adequate. Life insurance. Now, life insurance is a tool which will provide for your child lifelong care expenses in case you are not there tomorrow. Now, life insurance is such an important element for a single parent. You might not be able to accumulate the entire money from your own savings. So, how do you bridge that shortfall? Life insurance is a tool where you can bridge that shortfall for your child expenses post your lifetime. With 100 years term insurance available, in my view, you have a very good tool which can even provide for your child care in your later years of life after your lifetime. So, term insurance is the first one. Ensure that you have an adequate term insurance. When I say adequate, it means it does cover your special child care costs, it covers your liabilities you have taken, it covers the loans you have taken, or whatever you think are the financial implication, the liability responsibilities to be met after your lifetime, those are covered. If you don't cover the gap, then what happens that for your child care the funds will be short. So as a single parent, it's important that you go along with a good term insurance coverage. The second is the health insurance. Now, if you are employed, probably you would think that employer health insurance is good enough, but no, employer health insurance will run only till you are in job. If you are not, then you need a standalone health insurance. Ensure that your health insurance is adequate. Now, why I am saying a health insurance is adequate? As I said, insurance means it can cover up expenses which can arise due to emergencies, and which ensures that your savings is intact. If you do not have health insurance, then what happens? Then you end up spending the money in your savings. So what happens to the special need child care? All that questions will arise. So ensure that you have a good health insurance coverage which can ensure that if any health emergencies come up, then you don't have to spend money from your pocket, your savings are intact. The third is the disability. Now, in general, we do not talk about disability. Now, what is disability? It can arise at different stages. Old age disability is there, but if disability happens due to any accident, you can be temporarily disabled, you can be permanently disabled, your income may stop. then what? The term insurance will not work in that case. Then insurance which can cover up expenses during the disability, those insurance would be good to purchase for covering the risk of disability. In general, accidental insurance policies cover disability insurance. So ensure that you have got a good coverage on this risk also. So life, health and disability are the three pillars which needs to be there with you all along, being a single parent while you are managing your special need child affairs. Now the fourth one is the stable career. Now it's important for every parent, it's important that you have a stable career, but for a single parent it's more important that you have a stable career which can ensure that at least next 15-20 years of your child life can go along. If you are thinking of something of your own, that is a risk you are taking. In general, when you have a special need child to care, you do not think of so much of risk taking. And when you are a single parent with only you are the support, then it's more or less you don't think on the lines of taking that much amount of risk. But if you do think about it, then ensure that you have a buffer created which will ensure that next 1 year, 2 year, 3 year expenses can be met from this buffer. So you don't have to rely upon any support. So as a single parent, you need to have a stable career, and when you are having a stable career, that means 15-20 years of your child life, you are not going to face much of the issues. Between these 15-20 years, if you do think that you want to start something of your own, which can help you increase your earnings, which can help you providing for your child more money, then ensure that you have a buffer created for the period where you will need money to meet your expenses. The next is low debt. Now, a middle class family largely take debt to purchase, say, a house, a car, or any other goal. But having a debt doesn't mean that you cannot provide for other goals. Having a debt within your means will ensure that you can provide for your child goals. Now, if you go, say, beyond your means, if your debt is heavy, how you are going to repay it? Insurance is one tool which repay the debt after your lifetime. But what happens within your lifetime? Does it impact your savings? What kind of a loan you are taking? If it's a housing loan, probably your EMIs can be higher. How does it impact your savings? If it reduces savings, then there is a concern. If the debt is high, you do not have enough of assets accumulated, then it is a concern. And if you have debt with a higher rate of interest, then it is a concern because your payout is much higher. So whatever debt you buy, you need to ensure that as a single parent, you are low on debt. If viable, possible to the maximum, ensure that you meet your goals from your savings. So when you are purchasing a debt, see how much you are paying, see how it doesn't impact your future savings, see how it impacts the planning for your child, and then go for a debt. And if you are currently running a debt, do an analysis. See how much debt is there on you, whether you have enough of assets to repay it, how you are going to repay it in the future. As I said, whether it is within your means or beyond your means. Now how do you check whether a debt is within your means? Check how much your EMI you are paying. If the EMI is more than 40% of your net income, then probably 40% of your net savings, then probably you are repaying a huge EMI. In general, when we advise, including all your debt, your EMI repayment has to stay within a limit. So when you purchase a debt, or if you are in debt, you ensure that or you analyze how much debt you are repaying. So these are the 5 important aspects which I have spoken about on financial planning by a single parent for special need child to care. First is the budgeting. So start budgeting separately. Create a separate budget for the special need child. Second is emergency fund. Create a higher emergency fund because you have a special need child to care. 9 to 12 months is a good emergency fund to create. Have an adequate insurance. Life, health, disability are 3 important pillars. Stable career. May ensure that you opt for a stable career at least for 15-20 years. If you do plan to do something of your own, you ensure that you have created a buffer for the period where you have to meet your expenses. And lastly, low on debt. So whatever debt you purchase, you ensure the EMI is within your means, shouldn't go more than 30 to 40%. Then your total debt on you, it is within your means. You need to check how you are going to repay that complete debt, and whether you have taken a coverage for the debt if something happens to you. That means you have taken an insurance on that debt. So these are the 5 important elements for planning by single parents. Now there are other aspects also which I am going to talk about in the next episode, and which will be more on what after you, on estate planning and other elements. But when you are planning for your special need child future, when you are planning for your family future as a single parent, you need to ensure that you are prepared on all front. You are prepared for any eventualities in the future. You are prepared for the future within your lifetime, and that can only happen when you start planning. So ensure that if you haven't done, you start planning. If you have been planning, just have a recheck that whether you are planning is right, whether the provision you have made are adequate. So that's for now. As I said, in my next episode, I'll again talk about single parents, but with some other tips, some other elements to discuss in my next episode of PSN Speaks. So see you in the next episode. Bye for now. If you want to discuss something, if you want us to cover some elements of special needs planning, you can put your comments, you can put the topics in the comment section, and we will ensure that we do cover it in our one of the episode of PSN Speak series. Thank you. Bye for now. See you in the next episode.